agenda, we're going to cover quite a range of topics really across the stack, looking at the hyperscalers and the investments going on from the infrastructure layer, diving more into the PaaS side of things and the data opportunity, and then the SaaS market opportunity as well around agent contextualization and some other trends. So, just to kick it off, we're going to kind of shift gears a bit, but maybe we'll start on the PaaS side of things and what we're seeing. So there's kind of three overarching things to touch on. But first, just to bring your attention to the graph you see on the slide, this is from our customer research, where we asked enterprises what their biggest GenAI adoption barriers were. And of course, nothing is going to displace the security risks of AI, regulation and lack of skills rank up there as well. But the data-related challenges pretty consistently continue to come up. And we do hear a lot of that feedback directly from the IT decision makers that we speak with. And so what those data challenges look like specifically, it's really in two high-level areas. It's the data architecture, establishing those core foundations, having a unified abstraction layer that can work across clouds, more integration between the different data warehouses and the data lake systems that exist in different environments, and then of course the unstructured data and having effective lifecycle management so that the AI can effectively pull it. And then the next piece is really the governance side and establishing the access controls and the different policies around that data. So those are two areas where customers are very focused. Taking a second look, we think, at this point, pilots have moved into production. There's been some early lessons learned from different rollouts. So we expect to see more of an increased focus on putting the right data components in place for effective AI. So on the vendor side, what does that look like and where it's headed? We've seen this shift toward more open data ecosystems for quite some time, really an effort to establish a single source of truth for data based on open standards. And so if we just look across the hyperscalers, I think historically AWS reputation for being a bit siloed in this regard, but I do think we're seeing that shift pretty dramatically. And so if you look at what AWS is doing in their partnerships with Snowflake and now Databricks in terms of single copy integrations and data access as part of the same format. So we tracked their launches at reInvent, SageMaker AI, they did S3 tables. Those kind of innovations we think were really a big testimonial for the Apache Iceberg ecosystem. So AWS moving in that direction, it's notable, especially when we see some other vendors, some of AWS's peers don't seem to be going that way, at least in the same intensity. Perhaps they don't have as broad support for Iceberg. They're more protective, if you will, of their data assets. So we think their role in kind of bridging these different ecosystems together will be interesting to watch this year. If you look at AWS Glue, a pretty robust tool for data cataloging, that's the step customers are going to take, classifying the data, seeing what they have prior to training the model. So again, AWS has its own tools and its own native capabilities, but you do see this establishment with partners and making sure that data can be shared and interoperable across different platforms. So through this year, in terms of data sharing and access, I think we're going to continue to see a lot of developments, a lot of maturation this year. Maybe other hyperscalers kind of adapt as well. That said, the big gap with that is, of course, the governance. And now that you have this more open data ecosystem, how do you put the policies and the access controls in place around those different data players? So again, that's the big challenge, and it is going to require an ecosystem approach with different vendors coming together to support that. And then just lastly, this piece around agentic AI and kind of where the value is shifting. We know there's been a change from the more generic prompt and response use cases to more contextualization with RAG and some other approaches. So the role of those data ecosystems I mentioned become really important. If we're talking specifics, I think ServiceNow is a really great example of that. You see what they're doing, essentially entering this new market, right, with workflow data fabric and establishing connections, not just with Snowflake and Databricks, but now they're welcoming Oracle and Google into that ecosystem as well. So they're, getting the data those AI agents are going to need and importantly, tying that into a specific workflow, which we know is what ServiceNow does best. And we think this shift too also brings more SLMs into the discussion, right? We think that will be a trend to watch for this year as well. I know my colleagues have opinions on that, but just the role of these models, could be sub 10 billion parameters. Just thinking what like IBM and Red Hat are doing with the Granite models and Red Hat's Instruct Lab to kind of supplement the RAG technique and really go after the big pain points that exist, which are cost, regulatory, and then, really getting enterprise data better represented in these models. So hopefully that gives you a bit of a sense of what we're seeing and kind of what we expect to see through 2025. And with that, Alex, I'll pass it to you to walk us through our predictions in the SaaS market.
Great. Thank you very much, Catie. And thank you all for taking time out of your day to come listen to us. We're very happy to be speaking with you. So I am Alex Demeule. I am an analyst that lead our cloud applications research here at TBR. So with my time, I would really like to think about, really some of the points that Catie was just touching upon towards the end of her remarks, these ideas of contextualization. In my mind, contextualization and agentic AI really is a phenomenon that is happening in tandem together. And I will say that contextualization is probably an older phenomenon than agentic AI, at least when it comes to the commercialization. When we think about what the SaaS vendors have been doing, even when it was just a co-pilot, a prompt and output, there was some effort to tailor those co-pilots around a specific workflow, whether that be an LOB workflow or a vertical workflow. And so this diagram on this slide was really pulled from a special report that we published back in April 2023. So we've been talking about the contextualization process for quite some time. And when we think about, that near term to long term horizon, we're really starting to get to a pretty important point in contextualization. I'm starting to believe that, and I'm of the mindset that 2025 will be a really big year for a proliferation of contextualized tools. A big part of that will be SLM development. And I can move ahead now to the next slide. So this is kind of sort of updated view of that same diagram, and really focusing on the current vendor examples that we're seeing. As I was just starting to mention, a big driver of the contextualization process that's going to be happening over the coming year, and we'll see announcements alongside improvements into agentic development platforms, will be the SLM. There's so much talk in the market around large language models. Obviously, OpenAI and even DeepSeek is the most recent spotlight example. Ultimately, these are going to be more general purpose at the end of the day. When we talk about the parameter count and the massive amounts of data that goes into those large language models, tailoring them around specific use cases becomes much more difficult. And so what we've seen from the SaaS vendors, and not just the SaaS vendors, there's a lot of different players in the market that are focusing on SLM development today, but the SaaS vendors, for the sake of our conversation right now, from what we've seen from the SaaS vendors is a really heavy focus on the SLM architecture, parameter counts maxing out at 20 billion and below, and creating open frameworks. So, open sourcing some models to promote SLM development on top of the SLMs that they're developing in-house. So a very heavy interest in these lower parameter count architectures. Microsoft continues to grow its industry model portfolio, which now has 30 models included. Salesforce, in my eyes, has been a leader here as well. Microsoft's Phi, Salesforce's XLAM family of SLMs really is where they've been putting the focus. And a little bit of a difference between the two. Obviously, Microsoft is focusing a little bit more on the industry models, whereas Salesforce, we've seen a greater interest in workflow specific. So building out XGen Sales, which is a SLM designed off of their XLAM family to work on sales cloud workflows. So really focusing in on that and focusing in on expanding from where they are now. I think over the coming year, we'll start to see more SLMs for each of the cloud or the customer 360 workflows. And this presents a fair opportunity for the ecosystem. While Salesforce is a company that has a lot of expertise in CRM and, arguably is probably in the best position to make SLMs designed to support CRM workflows, there's definitely a strong industry component where they need to go external to get access to the data and to the domain expertise to support the SLM development. Microsoft's industry portfolio of SLMs, while it's built on Phi, it's built in tandem with a whole ecosystem of industry champions. So they're really focusing in on going to Siemens, Bayer, Rockwell Automation, Cerence, and getting these industry champions that have access to the vertical data to help them train these SLMs for the use cases that they're targeting. So there's really a strong internal focus on developing, but also a really strong focus on promoting development within the ecosystem. And Salesforce is a company that's going to need to go to the ecosystem for the industry use cases as well, right? So really thinking about, how this happens over the coming year, I think it's something that is going to keep their R&D expenses up as they continue to develop around these tools and promote model training and model development. We've seen a lot of work to reduce operating expenses elsewhere. Salesforce, SAP, Microsoft to an extent. Workday just came out with a big headcount consolidation. So we've seen a lot of cost reduction, but where we're not seeing is in that R&D line. And that's just to promote and keep pace in a pretty rapidly evolving GenAI story. And a lot of that being focused towards this SLM development. And kind of in closing, one of the things that I think needs to be sort of addressed through the ecosystem and on top of supporting, different industry SLM development is really looking at how the entire AI adoption framework can be contextualized. So we just finished up our customer research studies, which we'll be publishing in the coming week. And one of the things that really stood out to me was the different dynamic in change management that we're seeing with GenAI adoption. This is something that is different than past technologies where there's a lot of effort that needs to go into training employees and promoting their use of these new tools, and a lot of effort going into making sure that they're using them properly within guardrails, but also, bringing the use case to them and presenting it to them in a way that they can implement in their day-to-day work. So thinking about contextualization and in change management, and thinking about how different industries are going to be implementing Gen AI at different pace within different parameters, and thinking about contextualization really throughout the entire engagement is something that is really important. As Catie mentioned before, it's not just SLMs that the technology vendors are looking at for contextualization. It's from data all the way beginning with data platforms, going into the pre-training process with SLMs, the fine-tuning process after the SLM has already been pre-trained, and then the RAG on top of it. And then closing out with just how they're embedding it within the workflows. Contextualization, it's something that really has to be done at each step of the value chain. And this is something that we're going to see a lot more of in 2025. With that, I will pass it back over to Allan, who will do a little quick rewind and bring us to the first two slides. Allan, I'll hand it over to you.
Sounds great. Thanks, everybody. So if we go back to kind of the overview and roll up the presentation. For the cloud market overall, I think when you come into the year, it's been a year of slowing growth. The one real driver coming into the year, and really in 2023, which started off, was the rise in interest around GenAI, and kind of the interest around adoption, even before a lot of the specific examples around financial returns and the business cases that will actually support continued growth become clear. Kind of that momentum carried into 2024. And I think what we're seeing is overall a lot more inhibitors to growth than drivers of growth with GenAI adoption. And so kind of going through some of those inhibitors that'll slow growth, although, even double-digit growth, I think it's significant when taken in the context of IT spend overall, right? So a lot of focus around the efficiency, the cost reduction, and kind of those downward trends with IT spend overall. Cloud, in a lot of ways, was born out of the turbulence around 2008, 2007, was a cost efficiency driver for IT spend, a way to delay and reduce overall expense for a lot of those investments. And even through the COVID years, where there was a lot of uncertainty, a lot of economic issues that caused a reduction in spend, with the shift to a remote workforce, things that couldn't be done in person. IT, in fact, was a overall area of continued investment. And so, today's economic uncertainty with the size of cloud overall in terms of the budgets, a lot of the folks that we speak with our ongoing customer research, cloud is 50, 60, 70% of the overall kind of IT investment. And so in that type of environment, it's a certainty that there will be reductions to cloud spend, a focus on efficiency. And so I think overall, those are all things that kind of dampen some of the growth and continued expansion that we've seen over the past 15 plus years for the cloud environments overall. And then the last one, which is something that we've heard about for a number of years, is the repatriation. And I think some of it is inevitable, that there were workloads that have moved to cloud environments that are inefficient, could be provided more efficiently in a different environment, on-prem, in a private cloud environment, in a co-location environment. I think all those things are true to a certain extent, although it is limited. So I think it's in the single-digit percentages, things that are actually going to move from a public cloud environment back to a different on-prem or traditional architecture. A lot of times those are things that are stable in nature, that they have the resources, the skills on site to manage and provide those in a more efficient way. And so, move back, although it's, fairly small in terms of the overall percentages, and it's probably the smallest inhibitor of growth as we look at kind of the overall market going in. But some areas of growth within cloud overall. Continue to see a lot of investment around the platform as a service space. A lot of that is driven, by some of that data architecture, by the integration of hybrid environments, by all those things that, kind of speak to not just one type of delivery method, but multiple, in the integration of enterprise solutions which don't fit one particular solution, application, environment in particular. The integration between those hybrid spaces continues to be a big area of investment. And so platform as a service, I believe, is the largest overall segment as we look at it kind of in infrastructure, platform, and software as a service spaces. So I want to dig a little bit into the AI space because I think it's obviously the most impactful in terms of the overall growth environment. But also, on both the vendor as well as the customer side, there's been a rush to investment, but also coming into this year, kind of a refocus around the economics and what makes sense long term. And so as we look at from the vendor side, the disparity between their investments, especially on the infrastructure side, in order to support broader GenAI adoption and the capabilities that their customers will be using for GenAI, the numbers are staggering. And, up until a couple of weeks, I think the sense was this is just what was needed, right? In order to build out the data centers, build out the right physical infrastructure, build out the right technical infrastructure, including the processors and all that was needed to build, train, and support large-scale GenAI services. And, I think there will be cost efficiencies that develop over time as the DeepSeek news kind of came as a shock and, will be built into new models going forward. But, I think right now it's too soon to tell, is this really an area where you can divide costs by 10 and be able to support the level of availability and the services and the security that enterprises broadly in the US and in regulated markets and in Europe are able to utilize at large scale? Still very, too soon to tell. So I think some of the projects that continue to happen and the investments are still very necessary and will be kind of a decades-long monetization, as they go forward. So if you look at the revenue bars here, obviously we're looking at tens of billions of dollars of revenue being generated, growing very quickly. However, still surpassed by quite a bit if you look at the CapEx investments that we're allocating for just, four of the largest providers of these GenAI services. So it is going to be a long-term market, but we do think that the financial returns for customers as well as the vendors over the long term, will be something that justifies their investments in this space overall. So with that, we will close up and look at taking some Q&A over the next couple minutes. And the first question, how much repatriation are we seeing and how much of a growth impact do we see that having? So I covered that a little bit in terms of some of the overall market factors that are occurring. So I do think it's small overall. However, we have seen a renewed interest. And I think GenAI and AI in particular are driving some of this interest where, it makes more sense given those dynamics, given the gravity of data that is going to be used for some of these workloads to house that in an environment, in a data center, in a co-location facility, and then use that more in the long-term planning than we've seen previously. I don't know if any of my
Allan,
colleagues have anything else to add from the interviews.
Yeah, I can just jump in with a little color too. We just finished our customer research study, and that was a really interesting theme that came up in the research. When we asked customers, your preferred environment for running GenAI workloads today, it was really public cloud. And the factor was overwhelmingly access to innovation, and customers continue to tell us that access to innovation is really more than just marketing hype, right? It's what they're actually seeing from these platforms, Azure, AWS, and so on. But when we ask customers over the next 3 years, what does that delivery method look like? It was actually private cloud. So in the long term, we do see that private cloud on-prem environment increasing, and there's a lot of factors at play there. And one of them is just the volume of data being generated for AI and the latency issues that come with that. So the takeaway for, or at least for this round of research, was really public cloud right now has a lot of prominence where customers are leveraging GenAI, but private cloud seems to have a lot of long-term promise.
Okay, great. Another question. How do you see GenAI architectures forming? Where will LLMs be used, and where will SLMs be used?
I can jump in with this one. It's a great question. I've had a few conversations recently that have steered my opinion on this. One was with like a CTO of a $10 billion software company, and kind of talking about how he was positioning it within his software. And the other was a part of the customer research studies that we just finished up. And the complaint for the customer was just the amount of toggling between GenAI tools right now. He would be of the mindset that GenAI should be in the background. And he was of agreement with me, and I think probably many of you, that that's kind of where the technology was going. The insight from the CTO that I mentioned, he put it this way: it's going to be a chain where you have an LLM that is running the conversational UI, and then you're going to have agents in the background running on SLMs. And so a lot of the work is going to be on those specialized SLMs, which is kind of in the context of what I was going through before, and just how important those SLMs are to the contextualization process. But for sort of orchestrating that and being a clear conversational interface, LLMs are always going to have a clear advantage. So we will always see this combination of both. But I believe that as we start to get into more specific tasks and automating workflows, a lot of that background work is going to be being run on these SLMs, while the LLMs remain sort of what we talk to on the front end. And another thing I would add to that too, one of the things I like to talk about with this is the importance of the bi-directional prompting partnerships that we see forming. Microsoft has done a really good job of building an ecosystem around it. Salesforce as well. When I talk about these two companies being GenAI leaders, I point to the bi-directional prompting ecosystems that they're forming. And so as far as laying the groundwork for putting this technology in the background, and removing the need to toggle between those bi-directional partnerships are going to be very important over the long term.
Sounds great. One last question, just around how does the agentic AI trend impact and change the market?
Sure, I can jump in there too. It changes. One of the big changes that we're seeing with agentic AI is a shift to the consumption pricing method. So Salesforce, you're being charged, I think it's like around $2 per conversation and engagement with an agent, whereas with the co-pilots, and that's similar to what Microsoft is doing with Copilot Studio and its agent development platform. Previously, with the Copilots, it's like its own standalone subscription where you're paying $30 per month per user per month for access to Copilot. The consumption methodology is a little bit more of a lower barrier to entry in terms of you're paying based on what you're using, so it kind of gives customers the flexibility to go in and start working with agents and sort of figure out how to use the new technology, whereas Copilot, there's this upfront pay to even begin fee. So I think it's sort of I think agent will be a little bit more quicker to materialize in adoption. I think that cost, when we talk to customers, cost is a big concern around these tools, and I think that it just offers a little bit more flexibility on that front.